Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the share disclaimer. Be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show is for informational purposes only concerning Market Chameleon tools and products. With that, D, good morning, my friend.
Yep. Good morning, Will. How are you?
Good.
Um, so good morning, everyone. I'm going to share my screen here. And while I'm doing that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's keeping an eye on it, and he'll let me know and read it back to me. And to give you a couple minutes to put those questions in, we're going to start out taking a look at our pre-market report to see if we could get insights on what's going on in pre-market hours, and then we will move on to our questions. So over here on the pre-market report, up top, you're going to see this calendar view. And below that, you get some summary statistics, what happened in pre-market trading on that date. The idea there is to compare today's pre-market activity to the most recent history, and it allows you to spot or eyeball anything unusual, maybe a particular trend. Let's take a look at today's activity, which is August 15th over here. And as we could see, there are 653 stocks trading higher in the pre-market, 212 stocks trading lower. We have 182 million shares trading on up volume, 91 million shares trading on down volume. We have $5.5 billion worth of stock trading higher, $832 million worth of stock trading lower. From that perspective, it looks like the trading in the pre-market hours so far has a bullish lean. Let's look at it from a couple more perspectives, then we'll move on to our questions. As I slide down this page, what you will see is this more granular view of what's going on in pre-market. We have stock symbols, price changes, volume, and we also have our most active stocks, biggest percentage gainers, and biggest percentage decliners in pre-market. And if we come down here to look at the count, we have 185 stocks that made it onto our biggest percentage gainers list, 45 on our largest decliners. And that also indicates that the trading in pre-market hours has a bullish bias. Now, to make it onto this list, we set thresholds because stocks in the pre-market could have very low volume, low liquidity. And if it meets that threshold, it could make it onto this list, which would include small cap stocks. It could include ETF, a closed-end fund, preferred stock, leveraged ETF, or even an inverse ETF. So to narrow down this group of stocks further, you could use your filters above. Here, you'll see this in my watch list filter, and you'll see this in other screeners and reports that we have on the website. That allows you to screen this particular report you're on by stocks that you save in your watch list. Okay. We're going to use this filter in our example in ETF, which gives a similar concept. And I'll show you how that works. If you click on it, you get this drop-down menu to select from. As you can see, these are different ETFs. We're going to go and select this first one, SPY. And when we do that, you see that the list below got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500. So what we did was narrow down this group of stocks we want to analyze to S&P 500 companies. And the concept is if you save the watch lists that are S&P 500 companies and you used it, that's how you screened out this report. Here, we see 49 stocks made it onto our biggest percentage gainers list. None hit our largest decliners. So that also indicates that the trading in pre-market hours has a bullish lean. We gave it a couple minutes, Will, so if you have questions, I'll take them now.
Nothing's popped in yet, D.
Okay.
Let me share my screen before you go on to your topic this morning. What are you thinking about talking about?
Yeah, let me.
All right, you can take it over.
Let's go on to, let's pick a stock. Let's pick Amazon for today as our example. And I'm going to go to the options chain here on the left-hand side. Let's bring up the options chain in Amazon. And let me just close this to expand the screen. So I close the menu to expand the screen. And we have this options chain here. And I'm going to select an expiration from the left-hand side. So these are the different expirations that are available. Let's go to the September 20th expiration. You can see 66,000 contracts traded, 66,402 contracts traded in that expiration alone. So I'm going to click on it to bring it up. And when you click on that expiration, that brings up the options chain for, as you can see, Amazon September 20th. Expiration 26 trading days, 37 calendar days. And let's take a look at a particular option. We had a question to see if we could get a chart or graph of how that option performed, right? So historical chart of a particular option. So let's take the 170 call. This 170 strike, the call 640, 650. When I click on it, and I just clicked on the ask. So what that would do was bring up this option for analysis. You can see September 20th, 170 call price 650, that's where I clicked on. We could change that. And it's going to analyze it from the buy side. So you can do buy or sell. But since I clicked on that ask, it auto-populated for us on the buy. And we're going to run this analysis. And we get this dashboard of different statistics on this particular call. But I want to focus on this graph here. And the reason is that we had a question on from a couple days ago. Well, how do I take an option, or you could do a strategy and analyze where the price of that option or strategy was historically. And in this chart here, this is for the day, okay? And then we could go and look at a longer history, but let's start here. And what we see is a yellow line. And this is the price of that option. So you could see where it started, where it ended, and how it moved around. And then we have two more lines around it. We have the bid price of the option and the ask price of the option. Now, the reason we graph that is the following, that the value of this option in Amazon will change based on several factors. And even if the option itself does not trade, okay, but the value of it will change. So for example, Amazon stock to be worth more, it has to trade at higher price, right? It has to trade at a higher price. For Amazon to be worth less, it has to trade at a lower price. That's where the price changes, right? It's based on last traded price. Okay. That's how it's marked. It's marked on the last traded price. But with an option, it's a derivative. And the derivative, the price can change for other factors. You have time decay. So time impacts the value of the option. Even if nothing happens, the option will decay because eventually you have expiration and the option is either worthless or it's worth whatever parity is, or how much it's in the money. You have implied volatility that could change the price of the option. Then you have a delta where it's price sensitivity to the price of the stock. So if you can't just use the last price as the reference for its value, we have to go to an alternative method of pricing that option. And with listed options, right, any listed option, we have a specialist and market makers that are obligated to continuously provide a bid and an offer. Place where they're willing to buy it, place where they're willing to sell it. So wherever they're willing to buy it and where they're willing to sell it, that's a real price we could reference because those are firm quotes, right? That once that bid or offer is displayed, and as long as it's displayed and somebody tries to sell it on the bid or buy it on the offer, they're obligated to trade it at that price. So we do have real market prices to reference for options. Now, when we have this bid and offer, the option could be worth anything between the bid and the offer because you could still trade it in between that market, right? So you can put in a limit order that's higher than the current bid but lower than the offer, or the other way around, and it could trade there. So at that moment, the value of that option is anywhere between the bid price and the ask price, anything in between there. So by industry, if we have to reference a price, we reference the mark to market or the midpoint, the price that's right in the middle of the bid and offer. Right? Instead of a range, we just say the midpoint is the mark to market. So that's what this yellow line is. This yellow line represents the midpoint of that option at different times of the day. So these are like snapshots, whatever they are, 5 minutes. And that's how the option value, the midpoint value, has changed throughout the day. But that's the midpoint. Doesn't tell you the whole story because the actual bid and the offer could be very wide apart, which makes a big difference because the wider apart that it is, right, that means the fair value or the actual, value of the option, the range could be at many different prices, right? And much farther away from the midpoint, right? So how reliable is this midpoint? Well, we'd have to compare the actual bid and the offer, because the further they are away from the midpoint, the less reliable that midpoint is as a benchmark to track that value. The closer the bid and the offer is, the more reliable that midpoint is, because then that midpoint is not far away from actual bid and offer, right? So in this case, it's 10 cents. The midpoint 645, the last bid is 640, the last offer is 650. So here we also plot the bid and the offer, right? So you could see here the bid is in this like is that like red or burgundy, and the ask is in this green dotted line. So the takeaways then, looking at this graph, is not only do we see the price change, the price volatility, the range of the price moving around, and the path it took from the start to the finish, we also can see how the liquidity of the option behaved throughout the day. So if certain part of the day, the bid and the offer are very wide, we could potentially just eyeball it and see that on this graph, right? So the midpoint wouldn't tell us that. We would have to actually see the bid and the offer, the liquidity of that option. We could also see if the liquidity looks consistent throughout the day. So does the distance from the bid and the offer look pretty much consistent? You know, or if there is a liquidity, right? Let's say there's a big liquidity. Did it happen on both sides, or perhaps it happened maybe to one side of the market? So these are takeaways that we could get right from this graph, right? By eyeballing it. Underneath it, we also have these summary statistics. We have one for the midpoint and one for the actual spread, the difference between the bid and the offer. So if we just looked at the midpoint value, we could see the high of the day was $7.63, which looks like it was like up here somewhere in the morning. The low of the day, the mark to market, was $6. So that gives you a sense of the range that midpoint traded on the day, between $7.63 to $6. Sorry, didn't trade. That's where the midpoint was marked, 7.6. Because remember, it doesn't necessarily have to trade there. But that's the range. The median was 635 and the average was 645. So it gives you an idea where most of the day had been spent, right? What about from the morning to the close? What was the change, right? So if we just said, okay, where did it start out the day and where did it end up? Well, that's our first snapshot. So the first snapshot we took from the day looks like around 9:30. The midpoint was $7.63. And that looks like a pretty good benchmark midpoint because it doesn't look like, it was the bid and offer was very wide. The last snapshot we took down here was $6.45. So from 763 to 645, we see that the option itself lost $1.18. Okay. And it closed closer to the low of the day than the high. Because and closer to the average, actually, the average midpoint. So that's the change in the option price, the option value. What about the liquidity, right? How did the liquidity, the bid and the offer, look like throughout the day? We're eyeballing it, but let's look at a couple summary statistics. What was the largest range? What was the largest spread gap between the bid and an offer, right? Like how far wide did they get? And keep in mind, we're looking at yesterday's data. We're not open yet today. So this is yesterday's data. How wide did we get? Well, here it says the biggest spread between the bid and the offer was 15 cents. Went 15 cents wide. What about how close did it get? Did it ever narrow down? And if it did narrow down, by how much? Well, the low or the tightest spread that we captured, and these are based on, I think, 5-minute snapshots, was 5 cents. Okay, so now we kind of get a sense of the difference between, this is the highest that it's spread out. This is the tightest, right? So we get that range now. What about the median? The median is if we just looked at all the observations, said half of them were higher, half were lower. That was 10 cents. Actually, I should put the mode in there too. The average, if we took the average of all of them, it was 9 cents. So now we got really quickly a good amount of information about this option. We see how the option performed, how much it how it fluctuated throughout the day, its volatility. We see, how it performed on a day, where it was on average and the range of the high and low. And we also see the liquidity of the option between the bid and an offer. So we get a much better sense about this option from that perspective. So if we wanted to go back, I'm going to skip these stats for now up top. If we wanted to go back and look at it from a historical chart, we'll pull this up. And now we have the historical charts for this option that you could go back further in time. Okay, let's just stay on August 14th because now we have some more stats here. And let's understand what this is. So here we drew the same chart basically. This is that yellow with the bid and offer. That's what you could see here. It's checked off, and if we want to see the stats, the same ones we just looked at, this is the stats of the bid-ask spread. We also showed the bid-ask spread in percentage terms from the difference between the bid and the offer, okay, as a percentage of the bid. So this is the spread between the bid and the offer as a percentage of the bid. And the idea between percentage terms is that a 10-cent spread in like a $10 stock, right? Like if you go from 10 to 10.10, that 10 cents in percentage terms is not as hot, as big, as wide as if you had a stock, an option that was 50 cents to 60 cents. Because 10 cents going from 50 to 60 cents in percentage terms is much higher than from like $10 to $10.10. Okay, so that's what you have here. The spread in dollar terms and the spread in percentage terms. Okay, so let me close this. And we also here look for trades. So one of the things is we just looked at the mark to market. There could have been trades in this option, right? And keep in mind, we only brought it up as a single leg. We didn't bring it up as a spread or anything like that. So we're looking, were there any single leg trades in this option? Because that could also give us more ideas and clues how other people, use this option, or did they trade it, and what prices did they trade? What time of day did they trade? What kind of volume did they trade? Did it trade only once in a day, or does it trade consistently throughout the day, every 5 minutes? Like what type of, trading was involved in this option? So that's this single leg trades that it's not checked off, but let's just take a look at the summary stats. And here it says that, yeah, there were, before we plot them, there were trades in this option for volume weighted average price of $6.48. So throughout the day, if we averaged out all the traded volume by the weighting of the trade, the volume weight, $6.48. The median was $6.40. The highest this option traded was $7.75. The lowest $5.97. And the last time it traded was $7.70. So these are actual transactions, not looking at any more like bids and offers, which are indications of interest to trade. Right? A bid is an indication of I'll buy here. Indication I'll sell it here until it actually trades. These are actual transactions. The money in contracts for exchange there. There are a total of 524 different trades for a total volume 2,261. Why is there a difference? Well, keep in mind, one trade doesn't have to involve one contract. One trade could have 10 contracts. One trade could have 100 contracts. One trade could have 1,000 contracts. So this is the total volume. These are the number of trades. So I'm going to close this. Now let's plot it. So now you see some more interesting things here. We get these bars, gray bars, and that represents the volume of those of options that traded in that 5-minute period, right? I think these are 5-minute periods. And this lets us eyeball and see, well, was the volume consistent throughout the day? Was there only one trade? Was there anything that stuck out? And just eyeballing it here, this bar sticks out, right? It's really big and looks like 501 contracts traded in that 5-minute period for a VWAP price of $60.50. Excuse me. So that one sticks out. And this purple line, this compares the VWAP price. So these are the volume weighted average price cumulative throughout the day that traded in this option. So you could see that as the option price kind of declined throughout the day steadily, and so did the VWAP price, declined along with it, but remained above the line, kind of. So that's from trade price perspective. What I'm going to do is, Carl, I don't have enough time, but then we're going to get into what about other factors that impact the price, such as implied volatility. That graph is below, so let's get into that maybe tomorrow.
Nice job, D. And tomorrow, actually, remember, I'm taking my daughter for a college thing at Clemson. So I'm out tomorrow. So it'll be our next pre-market show will be on Monday. Great job, my friend. Thank you very much.
Yep. Thanks, Will. Have a good one. And
all right, everyone, have a great trading day. Thanks again, D. Have a great trading day tomorrow, everyone, and a great week.